Ladies and gentlemen, welcome to the Impact Investing and Social Finance session. Moderated by Cyril Gouiffes, Head of Social Impact Investments, European Investment Fund, with the participation of Fabrice Rego, co-founder, general partner, The Blueprint; Nikolaus, founder, partner, New Paradigm Ventures.
Good morning, everyone, and thank you for attending our panel discussion this morning. Thank you, Piotr, Nikolaus, and our organizers of the Alternative Finance Forum 2023. So today, with the fellow panelists here, or in this session, we'd like to focus on social finance, as in social finance in the venture capital space, which is often coined as impact investing. For a bit of a sanity check, just a refresher for everyone that impact investing is defined as investing in companies that actively seek solutions to world's most pressing problem on the social side, on the environmental side. So in this sense, it is different from ESG investing. Impact investing is really about proactively scaling business models that address most pressing issues we are confronted with. So this debate is particularly relevant, or this topic is particularly relevant, as Europe stands out as an ecosystem globally. Obviously, in venture capital, there's the size of the market. If you compare the European market to the North American market, for instance, there's still a long way to go for Europe, even though we're catching up fast. In the impact spaces, we have very strong and promising dynamics. So I don't want to hammer you with figures and statistics, but perhaps one that, according to industry surveys, the VC investments in impact startups in 2022 shrunk or decreased by more than a third compared to record year 2021 in the US. Minus 36% in 2022 compared to 2021. When you look at the figures, so the growth of VC investment in impact startups in Europe in 2022, it's still positive and it's still growing. So the ecosystem is such that there is a very significant potential for impact investing to flourish in Europe. And this is one of the topics I'd like to touch with Nikolaus and Fabrice. So Fabrice Rego from The Blueprint in Brussels, Nikolaus from New Paradigm Ventures in Vienna, but active elsewhere. Happy to hear your introduction before we jump into the topic.
Thank you. So I'm happy to be here. So I'm Fabrice Rego. I'm an ex-investment banker who became a VC investor. Just to give you a little bit of context, I moved to the VC world because I thought that my impact will be much more, will be larger than the impact that I have as an investment banker with large corporates. And I also think that on the perspective of young companies, their impact is much more important as young companies than as larger companies. They can make things move pretty much fast for everyone. At the Blueprint VC, we invest. We have a kind of a original investment thesis. We invest in diverse teams. Okay. Now, diverse teams. Why we do that? Because we are pretty much aware of the fact that diverse teams perform better than their peers. It's pretty much widely accepted now. Well, I hope, but it's well documented. Yeah, actually, we invest small checks from 100K up to 500K into early stage startups. Well, that's what we do.
Okay, great. So hi, my name is Nikolaus Hutter. I'm also an ex-investment banker and ex-venture capitalist. So I'm probably 10, 15 years older than him. So maybe you'll be sitting here at my age and saying the same. One thing that you learned as a venture capitalist is to look for the next big thing. And when I was in venture capital, which is the early 2000s up until right after the last financial crisis in 2008-9, when I founded then in 2010 New Paradigm Ventures, was at that time, I think venture capital was still very much about looking for value and then building a business model around it, monetize that value and sell it as investor returns. I think in the last 10 years, in the mainstream venture investing industry, that chain, value towards profit, towards investor return, has been broken, and it's been possible to create significant investor returns without actually generating profit. Most tech companies are not profitable, never will, yeah? And actually destroying value. So my mission now is to reverse that and to build that chain from value to profit to investor return in a way, because I still believe in the method and the tools and the vision of venture capitalists, and there's a lot of techno enthusiasts and optimists here. We've heard that from all the friends about you know, the blockchain, etc. And I'm with that, but it's also another reality where technology is actually toxic, and we've got all this discussion with AI and so on. So what do we do now? Entrepreneurial and investment solutions for the blind spots of markets. So the places that the topics and the peoples that markets neglect. And in a way, it's a kind of the ultimate abstraction of what Fabrice just said, that there's value in those places because what do you know to be true that nobody else believes? And this is their, you know, the underserved markets from a diversity perspective, but also from a regional or some kind of exclusion perspective, solving these problems as Cyril has said, that's where the value is. And from an investment perspective, venture capital is the tool to go there. So.
Merci. Thank you, Fabrice, Nikolaus. I was very fortunate, and we had a few iterations before being on stage. And what I find particularly telling in Fabrice's and Nikolaus' journey is that, again, and you'll correct me in the next 45 minutes if I'm wrong, but I see that with the blueprint, Fabrice, in your view, the strategy you're adopting is like impact is generated through the who, meaning who has access to capital, who can raise and launch his venture, who makes the investment decision. While Nikolaus, on your end, is very much on the what and how entrepreneurship can be a tool, an effective tool to address this number of issues we are confronted to. So, moving into the topic, and with the first question to you, what actually led you to design your impact strategy the way you did? If you want to start.
Yeah, I can start. I can start. So on our side, we decide that we want to invest in diverse teams. That means that at least 1/3 of the equity must be held by a diverse person, whether it is women or people of color. Okay, that's the two type of diversity we are tackling for the moment. The point was, it has already been said before, less than 2% of investments from VCs go to women's, and I think it's less than 1% that go to people of color of different origins. But on the other side, they represent around 30% of the entrepreneurs. So first is that means that you leave a lot of monies a lot of money on the table. Okay, I've seen it was back in 2019. There was a study from Morgan Stanley who said that it was about 4.4 trillion just for the US left on the table because you're not investing in women and people of color. That's, well, sorry to say that, that's just stupid. Okay. So we thought that we need to have this kind of focus because it will have a social positive impact, okay? But it's also financially pretty wise. So yeah, that's why we try to decide, we decide to have this kind of investment strategy. We are pretty much, I think there really is really few funds with that type of strategy in Europe, at least in continental Europe. There are most of them in the UK and definitely much more in the US, and they perform pretty well. So there's no reason that we couldn't perform well as well also in Europe.
Just a small parenthesis here. It's true that when one speaks about impact investing in Northern America, often, obviously, that would require some nuance, but often it is very much about the access and indeed diversity and gender strategies, while impact investing as we mean in Europe, or as we understand it in Europe, is rather geared towards sustainability and climate. So that's can only second this point.
Yeah, but if I can add something here, I think that if you want to have an impact, the social impact is really important, okay? And on our strategy, the thing is that when we invest in diverse teams, that creates new role models. Those new role models makes new generation of entrepreneurs. This new generation of entrepreneurs makes ourselves to have a much larger deal flow. And so we invest in those new generations, and that's a virtuous cycle, okay? So the positive social impact of that is really huge.
Thank you, Fabrice. Nikolaus,
yeah, similar logic. And I guess I have two allergic reactions and emotional allergic reactions. One is to bad engineering. So I've got this technology Tourette. I shout at my computer and my software, etc., whenever it's not working. And the other one is to injustice. And those are the two things that I see in the financial systems that are broken. It's morally unjust in many ways. It's extractive and exploitative, not by design, but by default in very often. So that's the justice piece. And it's also not working. The financial system is there to channel the resources where they're most productively used. And like I said, when we're maximizing investor return, not as a derivative, as the second derivative of actual value, but as something that is actually self-referential, it's not working. The companies that need it most, that are probably most meriting being financed because they solve the most pressing problems, and even if it's just providing a livelihood for the family of the entrepreneur, they struggle to get finance. So finance is broken, both morally and justly and functionally. So we're trying to rectify that, and also with a leveraged approach of not solving everything, but trying to come up with prototypes that can then be replicated. So an Austrian legal philosopher has said this, the normative power of the factual, that we tend to look at whatever is the factual as what should be. But with everything that is political or economic, which are all social constructs that only exist because we all, or a sufficient number of people agree that they exist in this way, we can change it. Politics and the economy can be changed. It's not laws of nature, right? It's not gravity. So you can turn that around, this normative power of the factual, and have the factual power of the normative that you imagine and then implement, even if it's just in a scrawny prototype, the things as they should be, and then nobody can say, yeah, but that's just a pipe dream. You can say, yeah, but it's a pipe dream that exists. Yeah, and then hopefully there's change coming from there. So it's the same logic, the same mechanism that Fabrice just articulated, and say like, okay, there's a huge blind spot. Only 2% of founders are diverse or even women, and that's a bias, and it's wrong. And I'm going to prove you wrong, not by just arguing, but by doing it.
There is this quote from a French author, Marguerite Yourcenar, in Memoirs of Adrien. And the author, Marguerite Yourcenar, has the main character, Adrien, saying, I make few promises because I intend to hold them, to keep them. What, in your views, are the core promises or the core commitments that impact investing is bound or here to deliver? Do you think, if I can add a second question to that, do you think that in your view impact investing is set to make a substantial change from inside the current financial system? It's a tough one, but the floor is yours.
Okay, I'll take a stab at it. When you gave the numbers of this crush in the US versus Europe holding up and still growing 4%, it's not a schadenfreude, but I think it's that made me rejoice when I first read in your preparation and then heard the numbers now again. Because in a way, I think it's a healthy washout. Because if you look at impact investment in the US, there's been a number of cases that have been repackaged or impact washed or polished up that shouldn't be there. Yeah. So Juice-A-Row with 2 O's, that was in one of the biggest impact funds, which is absolutely ridiculous. Yeah. It was a crap technology, has no impact, and there was some spin that was massaged into it, and then it turned out to be fraudulent and it blew up. Yeah. And I'm glad that this wouldn't happen right here in Europe. I don't think so. I don't hope so. Because, from you as the biggest limited partner investor into, or the EIF, yeah, as an institution, I shouldn't say you, but like the EIF as an institution, the biggest institutional partner, there is a different kind of ambition and purpose that goes through the European impact investment community that I feel. And this is value is created by solving problems, and then if you have a smart business model, you can derive profit from that, and that's what drives investor returns. So the chain is intact, and I think that's the promise. But we're also in the spotlight, literally, to actually deliver on that and to prove that even though it may be very easy to generate profit without caring, to generate investor returns, without caring where they come from, and whether they're actually real or it's just an inflated greater fool thing where you're just offloading it, and look at all the crypto speculation in a way, which is doing no good, I think, to the underlying value of these technologies, these innovations that they're used in a productive and inclusive and regenerative way. So I'm happy for that washout, and I think the promise that we need to have is that we deliver on that from a return perspective, from a profit perspective, from an impact perspective, and not get sidetracked.
Thank you, Nikolaus. Fabrice.
Maybe I can. Maybe I can also add something because I think. Unfortunately, most of the time, when people think about impact investing, they think about, they relate it with philanthropy or underperformance. Okay, and I think that's really a bad way to see things. Specifically, if you look at climate and social justice. Okay, let's take those two points. If you're creating value while destructing the planet, it's bad financial, okay? If you create value while destructing the society, it's also bad financial. And I'm pretty much convinced that, well, at least now I think everyone could agree that if you are investing without thinking about the impact, okay, the long-term value investment is less than if you think about the positive impact of your investment. And I think that's really key, and that needs to be changed if it's not already done.
Yeah. Maybe I can add to that. So when we think about impact, or when we think about value, the traditional way is to look at value as just profit, and that's the surplus of income over cost. And then you can sell part of that to your investors as a financial return, right? And now impact adds two dimensions: environmental regeneration and social inclusion. I think we need to add two more. One is security. Does it make us safer, both within a society and between societies in terms of international relations, such as getting out of Russian gas? Yeah? And the third one, maybe elevation. Does it make us better individually and as societies in terms of bring out the best in us? And that's what impact investment is about. And I see even especially to those later two, of course, the war in Ukraine has raised the security piece, but this mindfulness aspect, this elevation aspect, or Jefferson sentiment, Thomas Jefferson explained that, and there's lots of religious rituals like foot washing, etc., in the Catholic Church that engineer that sentiment. If we see people doing good, we want to do likewise. We're social animals. We've got mirror neurons, etc. So I think that's also an aspect that needs to be engineered, and we can be consciously engineering that. So I think that's also a promise, hopefully, that impact investing can deliver upon. To be that lighthouse. To exploit and engineer that lighthouse effect.
Thank you. It's, I totally confirm that there are still heavy cliches and given ideas on the impact investing that, with time, I think it's our collective responsibility to show that these are simply wrong assumptions from the get-go, and that we are here to fight like impact investing is only philanthropy or cannot generate return. I also often hear that, impact investing is part of the financial system. The way the financial system is currently designed, packaged, influenced by, is such that impact investing cannot make a real and will not make a real change from the inside. I often like to use this metaphor that finance is like blood in the body. It's not as if you can consider in one block this is evil and we have to get rid of finance altogether. And again, Alternative Finance Forum is also contributing to this. But again, excuse the tough question, and we have some more coming in on the. But do you think? Is it, in your view, only a way for the current financial system to sustain itself with convenient fields such as impact investing? Or can it really make a change from the inside, in your view?
Well, let me jump into that. I think there is two concepts which is super important regarding what you just said, or asked. First one is representativeness, okay, and the second one is diversity versus inclusion. Okay. So I would say that regarding the representativeness, I think that at some point, the people write the checks matters. Okay, I think when you have a decision, when a decision needs to be made. And you're in a team, if the society is represented in that team, I think it will have the decision, the outcome will be better. Okay, so I think that regarding the topic of impact investing, it's really important that all the decision makers represent the society as a whole. Okay. So that's my first point regarding that. The other thing is that diversity versus inclusion. I really think that actually diversity is the first step and inclusion is the second step. Diversity means that you are allowed to sit at the table, okay? And inclusion is that what you say has been heard, okay? I think that everybody agrees now that diversity is important, but inclusion is much more important. So if you already have those 2 points, definitely it will be better for everyone.
To add anything, Nikolaus?
Yeah, I mean, you're absolutely right. The point is to take the best possible decision and not, have middle-aged, academically educated Western white dudes take the decision, which is how it usually works. Yeah, and therefore, the decision gets better if there is inclusion. All various stakeholders are heard. Yeah, and also when there is a different perspective. Yeah? Because the fact that only 2% of or 5% of venture capital goes to women founders and even less to diverse founders is the fact that guys like us two are running the show at the moment, and it leads to bad decisions.
We have a number of questions that perhaps I'm not too sure about. I certainly think we have some 10 minutes, 15 minutes left. 15? Okay, brilliant. And I also have myself, so if we have time, perhaps I'll get back to them. But let's obviously make it as interactive as possible. So please continue to ask questions. The first one is, can you elaborate on the differences between ESG and impact investing? Isn't ESG a subset of impact investing? So again, fully reckon there is a share of subjectivity in there. So, certainly all of us, thank you, certainly all of us may have slightly different answers to this question. I would say the following, that ESG is a reporting standard. So again, no judgment here, and no. Obviously, I don't want to despise anything. But ESG is a reporting standard whereby I, as an entrepreneur, an investor, commit to share in transparency to my stakeholders what are the positive and negative externalities of my investment activity, my entrepreneurial activity on environment, social, and from a governance point of view. Each and every impact investments we close, for instance, at EIF, also has ESG requirements that are constant throughout our activity, no matter what the sector, the stage, the focus, even the financial instrument, in the debt investment, in the equity investment, you would always have ESG requirements. So impact investing is not a subset of ESG, and impact investing is very different from ESG. Two reasons. One, I mentioned in the introduction, that a widely recognized definition of impact investing is that it is an investment strategy that seeks to invest in business models, companies that address actively issues to social and climate issues. Second is that in the impact investing, in the impact investing space, the positive that is generated by the investment activity, the entrepreneurial activity, is not an externality. It is actually the core reason why the company is set up in the first place. And that's why there's always at par careful monitoring of both the financial performance and the impact performance. And by the way, also why when we invest, and apologize for beating the drums here, but when EIF prides itself in when we invest in an impact fund, we have an impact measurement methodology that is not a reporting standard, but an alignment of interest tool whereby if the impact objectives are not met, then the carried interest, so the financial incentives of the intermediary, would not be shared, would not be distributed. And I think it is a key element. There are many other questions, but perhaps you want to add.
You're representing an international institution. You have to be polite and diplomatic. I have the privilege that I don't. So let me try and shoot this dead horse of what's the difference between ESG and impact investing. ESG is a minimum standard, and it applies to anybody, no matter what you do. And this is like your minimum of being a good corporate citizen, to respect the boundaries of social cohesion and respectful treatment of others. A certain transparency in your process, that's the G, and the planetary boundaries of our shared home planet. Impact investment is, so in a way, this is putting a floor on limits of decent behavior as a corporate citizen, and saying, no matter what you do, and usually you do it for profit, that's your main reason, you do it under the conditions of these minimum standards. Impact investment is different. It is going out deliberately to solve pressing problems through business and enterprise and potentially repayable finance as a fuel to do that under the condition that it is profitable because you're doing it as a business. Yeah? So it's kind of the reverse. And the intentionality, I think, is the difference, right? Impact is first, and that's why I'm an impact investor, because for me, there's no difference. If you have this chain of impact is not just a, but the source of value, then you won't be profitable in the future and you won't have investor returns to offer if you're not generating impact. And then also the other questions here are about, race and integration and gender, etc. All of those are injustices. So pack it in. Yeah, you maximize your value by being inclusive and gender smart and integrative, and so on. And then the only thing you have to figure out, and it may be hard, is how to monetize that to make a profit, and then how to package that and convince your investors, because typically it will be in their blind spot, they won't see it. Yeah? So that's what we're setting out to do. But for me, that new paradigm, that's why our company is called New Paradigm Ventures, is already a reality. And the 4 drivers are factor markets. The investors will not fund you, and enlightened investors with a huge muscle like the EIB and the EIF are blazing the way. The EIB has stopped funding fossil fuel projects at the end of 21. That took $1 trillion out of the market, and you're typically refinancing by a factor of 25 to 30%, so you can multiply that by 3 or 4. That's a huge chunk out of the market. And that means factor markets, capital markets are closing up for polluting companies. The same applies to talent. The smart kids won't come and work for you if you don't have an impact strategy and if you're discriminating. Product markets, people won't buy your shit if it is, exploitative and destructive. And even if and then there's regulation, yeah, the taxonomy and the Green Finance Directive, etc. And even if you say, yeah, factor markets and product markets and regulation, all of that is, it's political and you can influence that. You can buy them, you can manipulate public opinion, etc. Well, there's still the planetary boundaries. Yeah? And so those 4 drivers, factor markets, product markets, regulation, and nature, are pushing back and are driving us towards this new paradigm of a impact and purpose-driven economy.
Thank you. I just perhaps want to also, related to this question here, nuance the statement I just made. It's not as if impact investing in the US are completely not interested in sustainability, and on the other end, on the other side of the ocean, European impact investors are not interested in access, gender, diversity. These are just trends, and obviously trends are led by LPs, investors' interest and appetite, also by the deal flow. So that means if you need to have promising, powerful, scalable companies active on these fields for those fields or thematics to gain pace. Yeah, so...
Sorry, I'm just researching something.
No, please, but just in the meantime, I also want to ask you another question.
What was the question? I didn't get, actually, I didn't understand how you answered the second question.
Yeah, no. I just in the question that is here on the tablet here, there's a question saying, but why don't American impact investors look at sustainability? Why European impact investors are not interested in gender and race? They are, but these dynamics are led by LPs' interest, the deal flow of these funds, and obviously you have initiatives like yours, Fabrice, show that it's not as if not interested. These are just trends, and trends are here to change and move, and obviously that's also one of the externality we hope that will come out of this panel discussion. There's a topic also very dear to my heart that after having been an active impact investor for the last 10 years at the European Investment Fund, we obviously sit at a very privileged place of the market to spot what are the new trends and what are the new strategies being built up around impact. And questions to you guys who are really in the engine and on the market, what are, in your view, those blind spots or those sectors that could benefit from an impact investing an impact investment approach that for now we still don't see so much, that you don't see in your deal flow or you don't find an investor's appetite for, and that you think is a shortcoming.
So there's many blind spots of markets, because if you think about the way that we currently value entrepreneurially and financially look at value, we misprice risk and we undervalue opportunity. And also one thing that we've learned through COVID is that nobody's safe until everybody's safe. But that wisdom, piece of platitude, if you like, is pretty obvious in a global pandemic with an infectious disease, but it applies to inclusion, it applies to climate change. In the end, I mean, the path to you hit the bad thing in the system hitting you may be longer than somebody coughing in your face and you catching COVID. Yeah? It may be climate change, and then Vanuatu and the Sahel goes under, and millions come to Europe and knock on our door. So we see that. Yeah, it just may take a bit more complexity, but in the end, nobody's safe until everybody's safe. So we need to look at the most vulnerable spots. And I've been talking last night with a friend here from Moldova, yeah, Georgia, yeah. Those are spots geographically that we should be looking at. The Western Balkans. Yeah? We've had clashes between Kosovo and Serbia, and that's been fomented by Russia. So, and there are ways to do that, to look at entrepreneurial ways of solving the tensions that exist in those countries. Yeah? So everything that provides a risk, and typically whether it's biodiversity risk or everything, it's because people hurt. Everywhere where people hurt, those are places and topics and demographic and communities, etc., that we need to invest in and try and solve those problems. And there's plenty of wonderful social entrepreneurs with brilliant solutions that struggle to find money.
Yeah, definitely. On my side, I will maybe take something which is a bit more different in the perspective.
Thank you.
I think we are talking a lot about AI and the impact of AI in the next 10, 20 years. Okay. I think that on a social impact side, there can be a huge problem, okay, if we don't know how to manage and how to be sure about what we hear, what we see, and what we hear, sees mostly, I think. The veracity about what we hear and what we see. And I think there's a huge market on how you can make sure that that what you're reading, for example, is true, okay, or what you're looking at is true. And if you're not dealing with that, I think that could have a major impact on the democracy. So I think that it's a huge field. And I think it's at the intersection of AI, blockchain, and media.
Yes, I agree, but I think the problem behind that problem is a different one. It's, if you take Piotr's wonderful graphic that he showed about the leverage points, is that the leverage there is at the top, right-hand end, yeah, in culture. So I think what we need to change, we need to infect the host. We need to make capitalism more impact intentional. That capitalism is there not to create shareholder value, because that's not a problem worth solving. It's not even a problem. Shareholders, people who hold shares, have excess liquidity anyway. So to make rich people even more rich is not a problem worth solving. So it needs to be a consequence so that you mobilize and keep enough liquidity in the market. But the problem solving needs to be creating impact, and then profit and investor return is a consequence of that. So nobody would have a problem with Uber if it was owned by the drivers. Nobody would have a problem with AI if it was owned by humanity and therefore I don't know what the governance structure is. Maybe our blockchain friends can help us come up with that. Yeah, but if the intentionality of AI is not to generate outsized profits, and there's 10 billion invested in those companies, this is crazy. Yeah, I mean it's fantastic. But if that were serving humanity and not just grab the market and winner takes all kind of thing. So I think we need to change the intentionality that whatever we put in the world is there to make life better for everybody. And then things will flow. I have no idea how to do that.
No, but also I think that one important thing here is the problem with shareholder value is the short-term shareholder value. Okay. If you think about long-term shareholder value, I think, all those rich people will get poor if we destroy the planet, and they will get poor if the society is destructed. And if there are more and more people who are looking who are struggling, okay, is not in the benefit of the shareholders, okay, in the long term. Yeah. So definitely, how you look is a matter of the timing, I think.
Thank you for sharing. That's interesting, and indeed, these comments you made on what's the point really and what's an investment strategy when it comes to only stick to the short term versus the long term, on the who actually owns the value or the capital invested. There's a question that popped in regarding, does the AFF has gender requirements in its investments? Yes, we do have gender requirements in our investments. That also has to do with InvestEU, which is one of the mandates we rely on and invest on behalf of the European Commission, where obviously gender is a huge objective that we are trying to address. I mean, we are coming from far, to be fair. I think we do not have to blush on the statistics from our portfolio at EIF, but it's still lagging behind very significantly. So gladly welcome the fact that we do have gender requirements in our investments. Yes. Also, another one is, what is your vision on how to integrate impact investing into our education system? So perhaps two sides to it, and also let you react before getting to as a conclusion for our panel. But I think there are also two things. Impact investing is not a sector-defined investment approach. Impact investing is about incorporating non-financial data into your investment decision, and I think this is the major contribution of impact investing to the whole financial industry. Second, while there is no sectorial definition of impact investing, fact is that education has long been, from the very beginning of blossoming of impact investing, has long been one of the recurring sectors addressed by impact entrepreneurs and impact investors. So definitely access to education, access to quality tutoring, mentoring for students from underprivileged areas that typically cannot afford tutoring, and which has then very negative consequences on the life, university prospects of such a kid. Through technology, there are very significant shortcomings that can be addressed in the education space, and they grow as we speak. Now, it's also important to, my background is in microfinance, so I think it's important to also assign the right objectives to impact investing. The parallel with microfinance, it was often referred to as some kind of magic stick against poverty, when Mohamed Yunus was awarded the Nobel Peace Prize in 2007. And suddenly, once it gained pace and interest, we started seeing issue in the microfinance space, and we hear in the panel this afternoon more about microfinance. Same goes for impact investing. I think it is a very powerful tool, very important strategic tool, because it can accelerate innovation. Let us not be misled. It is not a magic stick against climate distress, against social injustice. We also need well-functioning welfare state. We also need well-funded, smart NGOs that effectively fight these issues. I think it's just an important reminder. It's not to play down the role of impact investing, but to the contrary, making sure we have the right objectives, we allocate the right objectives to impact investing so that it can hold its promises, basically, or keep its promises. Thank you very much for your attention. Thank you. There is another one. You want to take this one?
The last one?
Yeah?
I'm not sure I quite understand it, but...
I can read it. What do you think about the report throwing fuel on the fire?
Financing of fossil fuel expansion shows financial sector not fulfilling their compromises. I'm not quite sure I fully understand, but I mean, if you look at the Paris Agreement, then the carbon budget is such that we can only pump up the already accessed fossil fuel reserves, not the ones that are identified but not yet drilled into. Yeah? So the valuation mechanism for the entire fossil fuel industry, which is based on the contractually secured, identified reserves that have not been started to be exploited, is absolutely nil and void if we respect the climate agreement, because it doesn't allow space for that, for the value, yeah, of that fossil reserves that are there. That's been 2015. We're talking 8 years into that. So something is wrong. Saudi Aramco being the biggest IPO with $1 trillion floating valuation, or the Paris Agreement. Something's wrong. And it's a power play. It's pure politics. If you look at the financial markets, I mean, that all the fossil fuel industries, if it were, based on economics and, assuming that we mean the Paris Agreement, then the valuations of the fossil fuel industry, the entire industry, would have evaporated in it like that. It didn't happen, of course. Stranded assets, etc. So I don't know whether I'm answering the question, but I think that power balance is shifting towards what is true and what is right, yeah, what is just and what is factual, hopefully, and that democracy and the rule of law, and the West, the EU, if you like, as a model, is gaining the upper hand. And I'm very happy also to see the politics gaining a primate over the finance, because finance should be serving. It's a tool. It's not, if finance leads, it's typically not leading in the right direction.
Yeah, as a conclusion, I would say on my side that I think that if we are at the same place in 20, 50, 100 years from now, we won't talk again about impact investing. We would just talk about investing, okay? And at the end of the day, the impact size will be incorporated in the investment, okay, directly. So we're just thinking about, we invest, and that's it.
Yeah, exactly. Thank you very much, gentlemen. Agni, Neoclis, and Piotr have been quite ambitious, asking us to cover these fascinating, broad topics in 45 minutes, but we hope we could contribute, and thank you for your attention. Thank you.